Hi, and welcome to another episode of Monday Market Outlook. Last week, the BSP decided to pause rate hikes, pegging the Philippine interest rate at 6.25. This could be good news for the markets as we see the markets react positively to this news. No? Now, aside from that, we are currently wrapping up our earnings season. Most of the Philippine companies have a median year-on-year growth of close to 11%, which is not bad. But aside from that, the usual earnings reports, rate hikes here, rate pauses there, we have to admit that it has been pretty unexciting for the markets in the past week. Now, if we look at the PSEI chart, we were able to currently bounce off of this critical zone here at 6,524, which is good news, and hopefully the PSEI will be able to challenge the 6,740 resistance zone. Now, if you look at the past 2 years of the PSEI, right, we have just been trading in a range. Now, if you have been FOMOing yourself into rallies and then selling every time the pain of loss becomes unbearable, right? You're not making any money. You're not doing yourself any favors, right? So, as we mentioned at the start of this year, in a range-bound market, we have to employ a buy low, sell high strategy, right? So far this year, we have had only one opportunity to sell high, which is this high here. And if you recall in our previous episodes, during this time, we were recommending investors to top slice. And then so far this year, we've had one opportunity to buy low, which was at this point in March where we recommended to start looking for PH bargains and slowly accumulate. Don't accumulate aggressively, especially in a range-bound market. Slowly accumulate. Now, as the MSCI rebalancing is well underway, we're seeing the effects on AC, which will benefit from a net cash inflow of around $65 million, right? So AC has started moving up. If you're a bottom fisher, right, so a couple of interesting charts you may want to look at. Telephone here, a good base formation here. This confirmed bounce could result in a good recovery for PLDT, right? But remember, the PLDT is still on a downtrend. So there's still a possibility that this may still continue further down the line. But nevertheless, we could see a potential for TEL to reverse this trend soon. No? Now, it's important to confirm bounces before doing any actions, right? Because if we look at Monday here, some traders may try to anticipate price movement. Now, don't do that, right? Never anticipate or never predict, because if you look at Monday here, some traders might see this as a very strong support level. Why? Because this level has held for 1, 2, 3 times, right? And when we arrive at this point here, some traders may anticipate that this support level may hold and anticipate a bounce. Now, if you anticipated that bounce, look at what happened, right? It broke down from its support level and continued going down, right? So don't anticipate, confirm. Now, if Monday confirmed its bounce from the support level, then that would be a good time to enter, right? But without that confirmation, you'd be gambling. Always keep that in mind when you're trying to buy low, because if you buy too early on the low, it might actually go lower. Going to the global markets, the conversation there again is still the debt ceiling. There were some good developments during the negotiations, which drove the S&P higher, but we are still in a wait and see mode. Now remember that the last time that the US increased their debt ceiling was back in 2021, and that came down the wire 2 days before the X date. Now this year is most likely going to be the same scenario. The discussions might again go down the wire. For most of the next week, the market may still move in a narrow range. So if we look at the S&P 500 chart, see how the market only moved along this narrow range here before it rallied when some good news almost came out of the debt ceiling negotiations. So the extreme zones for the options would be 4,200 and 4,100. So it is possible for the markets to again move along this range, especially given that investors are more or less in a wait and see attitude, no? But again, going back to Dr. Copper, it has already started to trend downwards. Now, if we add in the S&P 500 chart here, we're seeing a decoupling of Dr. Copper chart, right? Now, another chart we can use to track the S&P 500 would be the high yield bonds chart. Now, these are basically junk bonds, right? And if you look at how it closely tracks the S&P 500, you can see a very close correlation on the HYG and the S&P 500. And again, we have the same scenario here where the S&P 500 and the HYG has decoupled in the past few weeks. A lot of investors are seeing this as a sign and are using this in anticipation of an eventual market weakness. So if you look at the options for next week, look at the put call ratio, it's at 2.6, which means that there are a lot more puts in the system, a lot more people anticipating that the market is going down versus the market going up. And that's the thing with the markets, right? When everybody's expecting the market to go to one direction, the market does a 180 and does the opposite. Now, last week, Fed President Logan also came out with a statement that the current data still doesn't justify pausing rate hikes yet. So this increased the chance of a Fed hiking rates another 25 basis points during their June meeting. And speaking of economic data, next week we have a slew of economic data coming out in the US. Now we have your services PMI and new home sales coming in on Tuesday. The Fed minutes coming out on Wednesday. Q1 GDP results coming out on Thursday, as well as initial jobless claims. We'll see how resilient the US jobs market still is. And of course, the PSEI index coming in on Friday, right? So again, not much excitement happening into the markets. We just have to wait and see how all of this plays out. And again, always when you're investing, be patient and wait for the right opportunities to go in or cash out of the markets, right? So that's it for this week. I hope you found this episode useful. Please like this video, subscribe to the channel. Again, good luck on your trades, manage your risk accordingly, and I'll see you again next week. Bye-bye.